Ladies and gentlemen, welcome back to Driven Wyld. Today we are talking about qualified business income deduction. So one of the many deductions one can take on their business is the qualified business income deduction. And people in my comment section of one of my other videos talking about taxes were stating that they were planning on looking into it. And me, a dirty opportunist, saw that comment and thought, why don't I do that for you? So with that said, we are talking about everything you must know about the qualified business income deduction, some of the nuances that come with this deduction, and everything in between. But before we do that, let's go over a quick disclaimer. The content of this video does not contain and is never intended to be legal, business, financial, tax, or health advice of any kind. This video is for entertainment purposes only. It is advised that you conduct your own research and consult qualified professionals before applying anything you find online. Also, thank you to GigTax for verifying this information and making this video possible. What is the qualified business income deduction? The qualified business income deduction, or QBI, is a tax deduction that allows eligible self-employed and small business owners to deduct up to 20% of their qualified business income on their taxes. This can also be referred to as the 199A deduction because it comes from the Tax Cuts and Jobs Act, more specifically, Section 199A. Duh. Taking the QBI can help you save on taxes by significantly reducing your overall tax burden. In general, the total taxable income in 2023 must be under $182,100 for single filers and $364,200 for joint filers in order to qualify. In 2024, the limit have rose to $191,950 for single filers and $383,900 for joint filers. If you're over that limit, complicated IRS rules determine whether your business income qualifies for a full or partial deduction. Who qualifies for this deduction? The qualified business income deduction is for people who have something known as pass-through income. That's business income that you report on your personal tax return, and entities eligible for said qualified business income include sole proprietorships, partnerships, S corporations, and limited liability companies, or LLCs. Since most gig workers operate within these pass-through entities, they would likely qualify for this. So, good for us, right? However, C corporation income, or income earned as wages, is not eligible for business income deduction. What is qualified business income? The qualified business income deduction by definition applies to qualified business income QBI. Qualified business income is defined as the net amount of qualified items of income, gain, deduction, and loss from any qualified trade or business. Broadly speaking, that means your business's net profit. But there are other items included in this as well. QBI deduction items include the deductible part of your self-employment tax, self-employed health insurance, deductions for contributions to qualified retirement plans such as SEP IRAs and simple IRAs, unreimbursed partnership expenses, and business interest expense. But this also means that not all business income qualifies. QBI excludes capital gains or losses, dividends and payments instead of dividends, interest income, income earned outside of the US, certain wage and guaranteed payments made to partners and shareholders. The IRS has a more intensive list on this, so I'm going to leave that in the description. Feel free to check that out. How to qualify for the QBI deduction. If your total taxable income, that is not just your business income but other income as well, is at or below $182,100 for single filers or $364,200 for joint filers in 2023, you may qualify for the 20% deduction on your taxable business income. In 2024, the limits rise to $194,950 for single filers and $383,900 for joint filers. Now, most gig workers are within that range, no problem. But if your income is above these limits, that's where the headache really kicks in. Above those limits, your ability to claim the pass-through deduction depends on the precise nature of your business. And even if your business qualifies, there's a chance you won't get to enjoy the full 20% tax break, as qualified business income deduction is phased out for some businesses. Again, Most gig workers are not concerned about this. But if you have been listening to me and you developed an exit strategy for yourself and are treating the gig economy as an income bridge to what would be a long-term goal, not just the goal, it could get complicated and fast, which makes this one of the many questions that you should be asking your tax professional about. How the qualified business income deduction works. There are a couple of aspects of the pass-through deduction that you should keep in mind. Number one, there are actually two 20% figures. The qualified business income deduction is going to be worth up to 20% of your taxable business income, but that is also true when you're claiming this pass-through deduction, and it can't add up to more than 20% of your total taxable income. Here's how this is going to work. You figure your business income and expenses on a Schedule C as normal, and you figured out your adjusted gross income on Form 1040 as usual. Only after that do you start calculating this pass-through deduction. And number two, you can qualify the qualified business income deduction even if you don't itemize. That is, if you use the standard deduction, this deduction is still available to you. Of course, the best way to ensure that you're doing everything by the book and staying IRS compliant with your deductions of all kinds is to consult with a tax professional, and GigTax is here to help. Filing your taxes promptly, accurately, and on time is an inevitable aspect of being in business for yourself. For every hour spent navigating tax season alone, you miss out on potential opportunities, precious moments with loved ones, and expose yourself to financial risks. Recognized as the leading tax preparation service for gig workers, GigTax is dedicated to simplifying the process, saving you time, energy, and money. Driven Wyld subscribers can take advantage of an exclusive 77% discount on GigTax's tax prep, bringing the price from $538 to $124. Act now to get this price locked in before GigTax's calendar is booked, because GigTax helps people just like you make the wisest and most effective decisions on your business and personal taxes all year round. Secure your spot today with GigTax using the description link below. Go to their Instagram page and slide into his DMs with the word WYLD. And get back to what you do best, making the most amount of money in the least amount of time in the safest possible way. Thank you so much for watching. I really appreciate it. As always, make sure to hit the like button, subscribe if you're new, and I'll see you guys next time. Peace.